Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein of Linn Associates with your financial market wrap-up for this very active Wednesday, May 17th, 2017. And we're at about 4:40 p.m. Central Daylight Time. What I don't want to get into is making this a 20-minute long tape. Suffice to say this. I think trading tops formed in all the stock indices. I pointed out yesterday that we had the opportunity to create a triple top in the Dow. It's fait accompli. It's done. The market at 21,010 looks like we've got a triple top area and we're in a correction mode. All stock indices are out of their uptrends. We saw today a massive amount of safe haven buying in the gold market, the bonds, the notes, and of course the Japanese yen. That was pretty much where the safe haven buying was taking place. Now, when you take a look at the market here on a weekly chart, not daily, you recently got back up to this 21,010 level, failed. This week's high so far is 20,995, and you've broken down from there. I say that until that's taken out again, a trading top is in place. When you look at where the market's got an area chart of just closing prices, you've now gone from 20,954 down to 20,605, and you've broken through that sideways area. So I'm comfortable saying that that is in place. This is what that triple top yesterday looked like at 21,000. And this is 21,010. That's 21,010. That's 20,995 there. And you've broken through everything. What no one's telling you on the chart is start looking right here. Go back into your April charts and look at the gap left on the chart. Markets often fill gaps. I am looking for that gap now to be the target on the downside. The key is, in my opinion, not to take out these lows. If you just do that and correct, I'll say that we've got a trading affair with downside bias in the market. When I take a look at the daily, just to take a look at what's the trend, improve the trend is down. Lower highs, lower lows. Nothing changes that. That's a downtrend until you get over 20,995, which fits in with the scenario, I think, that you've got a trade top against that 21,000 level. Number two, you're under the 18-day average of closes, which gives you the downside bias. Should the market keep falling, the next support is the closest of the Bollinger Band and or this 100-day average of closes, which is 20,410. Resistance becomes the 18-day average at 20,871. You're under the Bollinger Band, so it's not your first target. You've already gone through it. Your next target's the 20,410 if momentum keeps up, and momentum is not even oversold. So that's very much in play, which could fill that gap that we talked about on the chart. When we come over to the NASDAQ, which was the poster child of the bull markets, it lost in one day, and I'll take you back. This is what the chart looked like yesterday. Still pointing to higher highs, higher lows. It had not been able to get up just about all month long to its upper Bollinger Band, in part held back by what the other stock indices were doing. The key was not to and is not to take out this 5636. Once it did, that was that. You've now got a pattern of a higher high, a lower low. You're under the 18-day average. Momentum is pointing down. So you're not trending, but you have downside bias since you're under the 18-day average, and the lower Bollinger Band is still in play, offering potential support. When you come to the S&P, you've got a pattern of this high is higher than this one. You got a higher high and lower low, so we're not trending, but we have downside bias since you're under the 18-day average for the first time, by the way, since mid-April. The first support was the Bollinger Band. It did not stop the decline. It could do it tomorrow. It could be an area plays with, but should you add more momentum to the downside, look for this level, the 2330, and again, you're not oversold. The Russell is, let's start with this word, oversold. The Russell has been, let's get rid of today's action, lower highs, lower lows in a downtrend. It had been not oversold coming into today. You have both numbers over 30. Therefore, the support that I was looking for would have been 1374 in the lower Bollinger Band, about that number. Neither held the market, so now it's in what I call a free fall. If it has another day down tomorrow, as you're turning this Bollinger Band down, like you're turning that one up, it'll start chasing prices to the downside. This has been the weakest of the markets. It's now the poster child of this decline, as I call it. In the VIX, you've left this area under 10 and broken out to the upside. Now, this has to prove itself. Do you remember back here you did the same thing? You got over it and surged. It wasn't a one-day surge like this, but it was still the surge. And within 2-3 days, it started coming back in and actually fell apart and made lower lows. I'm not saying that's going to happen. I am absolutely saying it could. You are already in overbought territory. You're over the upper Bollinger Band. In essence, unless there's a piece of bad information, I am not saying this is a one-off event. I'm saying trading tops are in place, but I'm not seeing a crash developing in front of us. The buying in the bonds, where did it stop? Look at this chart. Right against your upper Bollinger Band. The trend is up. The market exploded today. It is not in overbought territory. There's room for it to move higher, but it's interesting how it stopped right at that number and didn't proceed to go higher than that. You did so in the notes, not terribly, but you did close at the highs of the day, over it a bit. You did get overbought here. So this market's different. Suddenly the bearish picture in the bonds and the notes is completely gone. What does that mean if the Fed goes ahead in June and raises interest rates? It means that the impact of that is going to be extremely muted. They'll raise the rate to one number. The market's going to trade another number if this continues on. You start hearing real impeachment proceedings are happening. I don't think the Fed even tries to fight that scenario. Why throw good money after bad? Be patient. And I am not saying that impeachment's coming. In fact, I'm saying it won't be coming. The opposite. I'd rather stick my neck out that way, but I'm giving you scenarios. In the dollar index, look at this. Now, you have to go all the way back, but I'm telling you this number is down to go and open your chart and squeeze it together, as I call it. Take a look at your November lows. This market's lost all its bullishness. It's no longer the bull market. This is the bull market. The euro currency. But it's already overbought. It's now got a day over the upper Bollinger Band, and the flip-flop, let me come back to the dollar, you're under the lower Bollinger Band. So they're at opposite extremes here. The British pound had a good day, but I'm questioning if it can get much over this upper Bollinger Band right now, but it's got momentum pointing upward again. Higher highs, higher lows, so the trend is up. Resistance, the 130.09 level, support 129.20. Japanese yen. Well, without the event of the memos from the Comey memos, FBI Director Comey, you could see this market had nothing to say today was going to be an explosion day to the upside. You had a layer of resistance at the 100-day and the 18, but, and this is why I'm saying this, but what happened? You lost the embedded reading yesterday. When you lose an embedded reading, typically, price and the 18-day average make a run at each other. So I'm looking potentially for that number and or at least the 100-day average. That would be the first number that would be my target. If it exceeds that, then the 18. This is what it did. At least knowing that keeps you out of harm's way, and that's my point there. In the crude oil market, you fell back today, and interestingly, you held the 18-day average. So the trend is up, but you're overbought as can be. So I'm looking at this market and saying that you cannot afford in the next two trade sessions to see today's low of 48.37 taken out. If you do, you have what's called a bull trap. You had an outside day up today in an overbought area at a key support number. If that happens, I would be looking for the market to immediately give up a chunk of those gains. Looking at the gasoline, you're overbought. The trend is up, or is it? You took out today yesterday's low. I can argue now that I'm going to take one of these arrows, make it point down with that close that is lower on the day, and say that until today's high is taken out, the market has made a trading top because it's an outside day down. If it's taken out, I look for a fast challenge of the upper Bollinger Band. If it's not taken out, I look for the market to try to get back to the 18-day average of closes. It's an ugly chart, nothing pretty there. The chart that I think as a chartist you're looking at is, first of all, no trend in the Nat Gas. You got a lower low and a higher high. If the market wants to be bullish, what it should not do is take out 322.90. It should start trying to hold this area, get back over the 18-day average, and create a higher low, and then you'd have the higher high. What you need to also happen is not have divergence, so you've got to turn momentum around and get that red line at least stop pointing down. Without that, I don't think you have much of anything. The board's cleared, as you can see behind me, as we're getting ready for the 5 o'clock time frame. You know, one of the reasons I do all these videos for you, and I know we have a huge following in them, is because you want research. Well, I need to make some money on it in order to make the videos happen. So what I do is I offer a lot more research than you're seeing as what I call this vanilla package of videos that you watch on YouTube and some of the other websites. The real meat of what I do is done at 8:30 in the morning when I sit down with a cup of coffee, hence the coffee cup there, and I walk you through a video where I'm covering 40 or more charts at a time. And I do it slow. I take my time and I go through it the same way every day. I start in a sequence of stock indices, then I go to the currencies, the interest rates, the precious metal markets. From there, I'm going to move into the meats, the grains, the softs, the energies. And what happens is you can swing around on the video and go to the area you want to watch what we're doing. I'm throwing out in these videos ideas, buy here, sell there. Unlike what I'm doing here and just I'm trying to be as compliant as I can with rules, never saying you should go long here, the market's going to this. I'm saying that if it can get in these videos you're watching right now, if the momentum goes and if it can carry, this is one of the targets. But trust me, Bollinger Bands are not the only target. There are window envelopes in some other areas. I even use pivot points and things. So I talk about them all in here. Now, if you've already had a free 20-day trial, you're saying, well, I can't get another one again because I won't give it. But I will give you a $20 discount if you want to buy access. So if you're not a customer trading through us, it's $60 for 30 days. Take $20 off that. Just put in the code IRA20, you have it. If you're a customer, in other words, you have a funded trading account and you want the research, you're not getting it now, go there, sign up as the customer, and type in the code IRA20, 40 becomes 20. You can stop this whenever you want. You're going to get access to the videos, my twice daily updates. If you want oral updates, fine. Then all the Linn research, as long as you're on my research that we can give, we give. It's part of the subscription. Instead of saying, oh, we can give you 2 weeks to the Linn research, we throw that in. I told you I'm doing a library of studies. That's coming out, and how I tie this all in, I'm going to determine. I'm just about through with the MACD. So I've got pivot points done, MACD done. I'll be doing relative strength to finish the oscillators, some of them, and then I'm going to start attacking a massive amount of other tools, and tools that you'll be able to use intraday and for position trading. I probably even talk about longer term trading. That's going to be part of a library, and I'll figure out how we're doing that shortly. But 2 of them will be done this week, and maybe I'll offer one to give you a flavor of that. So how do you get the research? Let me stop right here. Click right up here if you're watching me on YouTube. Bang. It'll take you right to the forum page, and there's a video there to explain it, and a fax. Just click it. It tells you how everything works. You can also just go to our website at www.iraepstein.com, go under the word Ira's Research, and you can see it explains everything. It shows you where to sign up. Underneath us, if you're on certain websites and it says click here for Ira's free offers, that's all that it is. And of course, you can always call, which people are always scared to do, but if you give us a call at 866-973-2077, we'll actually walk you right through everything and get you all set up instantly. I'm Ira Epstein. Thanks for watching, and I'll see you all tomorrow.